Thanks, mate. So yes, we are recording this webinar, so anybody that wants a copy of it, just send me an email. I've got my email address coming up at the end of the presentation, so I'm more than happy to send you a recording. I'll also give you a certificate of attendance for CPD purposes if you want that. Just a little bit of a plug for Grant. We wouldn't be doing this webinar today if it wasn't for Grant Herbert. I started using Grant as my business coach back in 2008. At that point in time, my business was turning over around about $600,000, and he's managed to assist me in bringing that up to 1.6 million it will be for this year. He doesn't do what we do. He doesn't run with the numbers. He doesn't write business plans. He actually looks at you and how you work and what makes you work better. Accountants are pretty good at knowing what they need to do. It's just about convincing themselves they're capable. And we're all going to need that over the next couple of years because we've got a lot of changes to make. If we just think about what's changing in our profession, I think the removal of the accountant's exemption is probably the most important thing that's going to happen to your business over the next couple of years. And the fact we've had so many people register on this webinar is testament to that. So where are we at the moment? Just on there, you can ask questions as we go along. Grant will probably then read the questions out so that I can answer them. Normally I'm giving this to a room and lots of questions do come up. I'll try and address questions that normally come up as we go through. Now, looking at our current position, so what can you guys do at the moment as accountants with regards to SMSFs? You are allowed in the ordinary course of providing other advice to a client, you can advise them to establish an SMSF. Interestingly, you can only do that provided you give them a written statement telling them that you are not licensed to provide financial product advice and advising them to go to a licensed financial advisor. Now, what I do when I'm presenting this to a room of accountants is I always ask the room to put their hand up if anyone is doing it. So we do have the little hand thing. If anybody already gives that written statement to their clients, could they please just click the hand thing on the screen? Now, don't feel embarrassed if you don't click it. I've presented this topic to at least 500 accountants, and I've only ever had one hand go up. So very few accountants are doing it. ASIC are aware of that. They did some research back in 2012. I've got a copy of the paper. If anyone wants a copy of it, just send me an email. It's called Improving SMSF Advice. And they shadow shopped 150 funds or their advisors, and they noted that none of the accountants actually did give that statement. So we're not going to get in trouble for it now. We will get in trouble after 2016 if you don't give it. That's the only thing. Mind you, you won't be able to do this after 2016. You can currently provide unlimited compliance advice. So a client comes to you and says, I want to buy artwork in my super fund. You say, yes, you can buy it, and you run through all the rules for them acquiring artwork in a super fund. Interestingly, if they said to you, is artwork a good investment? In theory, you can talk to them about artwork as an investment because it's not a regulated product. However, the issue is that if you're telling someone to buy artwork, you're effectively not telling them, or telling them not to buy shares. So you are inadvertently providing product advice by talking about one product over another product. Interestingly also, you can't advise someone to establish a pension. A pension is a product, regardless of whether that product is held through an SMSF or a managed fund. So think about this scenario. You've got a client that comes to you, they're about to turn or have just turned 60. They're on a reasonably high income, they've got $500,000 in super, and you know that they would be in a great position to start a transition to retirement pension, to then salary sacrifice into super for an amount equal to the amount of pension, or obviously it could be an amount less than that because of the tax consequences. And that would be a very good strategy for those clients. But in theory, all you can say to them is, you should consider this, you should go and speak to somebody because the tax consequences are excellent, but we don't know whether you should start a pension or not. You've got to be careful about blanket saying to do it, because you might find someone starts a pension and they're getting part Centrelink or something, and then they come back to you and go, you've just cost me my Centrelink benefits. So all this stuff we can do now is called the accountant's exemption. And for years they've been talking about removing the accountant's exemption, And a couple of years ago, they came up with, yes, it's going to go. We're going to have a 3-year transition period, and you will note that we are well beyond halfway through that 3-year transition period now, whereby at the end of that 3-year transition period, all the stuff that we've been allowed to do up till now in terms of advising a client to establish an SMSF will no longer be allowed, and you will have to fall under the Australian Financial Services regime from the 1st of July 2016 if you wish to provide advice to somebody to establish an SMSF. Now, interestingly, you'll be able to go a bit further than just that, which you can't do now, which will be quite good for some people. You'll still be able to provide unlimited compliance advice, but it's just that establishment of an SMSF that you won't be able to do. So what options do you have between now and the 30th of June 2016 and going beyond the removal of the accountant's exemption? And these really are your only options. And I'm going to have a poll at the end of the presentation just to ask you which of these options here you are going to, well, what one you would at the moment consider that you're going to choose. So the first option is to do nothing. So what does that mean? It just means that I am not going to be in a position to provide advice to somebody to establish an SMSF from the 1st of July 2016. If somebody comes into my office and says, I'm thinking of establishing an SMSF, what are your thoughts? You have to say to them, I can't advise you on that, even if you've been my client for the last 25 years and I know your personal situation exceptionally well. I need to refer you on to a licensed financial planner. I don't necessarily want to choose that. I don't like using the term financial planner at the moment because going forward there will probably be more licensed accountants than there will be people that are just financial planners. So even you'll be an AFSL licensee or an authorised rep, but primarily be an accountant. Still doing nothing can still provide unlimited compliance advice, as we talked about before. So you might be in a practice where you don't expect to establish many super funds a year. You might say, well, I'm only going to establish 2 or 3 a year. And those people are actually coming to me to tell me they want one. I don't grab my clients, sit down and say, look, this is a good idea for you. Realistically, most accountants would only say to their clients they need one where they want to acquire their business premises or something like that. You may not have clients in that position, and you might say, I don't want to go through all of the expense and education to have this license. I'll find myself a financial planner, knowing that there'll be a lot of accountants that are doing this. Just as an example, I'm one of them, and I'll just say, well, I'll send them off to Peter. He can write a plan for them. He can advise them to establish the SMSF, and he can hand them straight back to me to establish that SMSF, and you'd be completely protected by doing that. Your second option is to go and do what I've done to get your limited license, and I'll run through what that means a bit later as well. You can become an authorised representative under a full AFSL holder, and I guess I can add to that, you can also become an authorised representative under a limited AFSL holder. So for example, if I decided to open my AFSL up to having authorised reps, you could become an authorised rep under the SMSF expert. You might go and do a joint venture with a financial planner, and you know that's where you actually put one in your office and you decide to start a financial planning business separate to your accounting business. I mean, I've put there you could become a full license holder. I doubt there is anyone in the room that could become a full license holder, so I won't really spend too much time going through it. Now, your requirements to get your own license, and this is one that you really need to understand. There's a bit of misinformation out there. To get a license, there are 2 criteria that you need to meet. One is an experience criteria, and the second one is an education criteria. So think about getting your CA or your CPA, what you had to do that. You needed to do the course, you needed to do a CPA, the CPA course or the professional year, and you also had to have a number of years, and I did it so long ago I can't remember, I think it's like 3 years, you had to have 3 years working under a CA or CPA. So you had those 2 requirements to become an accountant, and it's the same thing to become a licensee. You need experience, you need time giving the advice, and you need the education. We'll talk about the education in a minute. The only problem is if I actually asked the room and said to all you guys, how many of you have spent 3 years out of the last 5 providing licensed advice, no one could put their hand up. And I know that I certainly didn't have 3 years out of the last 5 when I went for my license. So what they've actually brought in is for the first 3 years, and that means up until the 30th of June 2016, if you have a practicing certificate with CA, CPA, or now IPA, sorry to the IPA members in the room, I've called you the NIA again. So to CA, CPA, or IPA, sorry, you automatically meet the experience requirement because you have a practicing certificate. So if anybody in the room doesn't have a practicing certificate with one of those 3 bodies, say for example you hold a practicing certificate with the ATMA, or you hold a practicing certificate with the NTAA, or you just simply don't have a practicing certificate yet because you're an employee of a firm, you will not be able to get your license at all. You will need to go and become an authorised representative and spend 3 years as an authorised representative. Now obviously if you're sitting here thinking, well, I wanted my own license, you need to go and get your practicing certificate and have that before you apply for your license, and that will probably be easier than spending 3 years out of someone else. Now the education requirements that you need to get, now whilst it's covered under RG 102, which stands for Regulatory Guide 102, and that's the guide that tells you how to get your license, most of us understand a thing called RG 146. Regulatory Guide 146 is an ASIC regulatory guide for AFSL holders as to how they make sure that their authorised representatives are competent to give advice. And it talks about what you need to do in terms of education and training to be able to provide advice. Interestingly, RG 146 not only doesn't mention that there is a minimum number of hours, it actually specifically states that it is not going to stipulate a minimum number of hours. So it doesn't say you need to do 30 hours of financial planning training. What it says is that as an AFSL holder, you need to ensure that your authorised representatives are competent, and these are the areas they've got to be competent in. Now that of course is a bit different to getting your licence. To actually get your licence, you need to be qualified, and RG 146 talks about Tier 1 and Tier 2 advice. Tier 1 being the higher level, Tier 2 being the lower level, but it only applies to simple deposit products, which none of you would be interested in only advising on. You would need to be a bank officer to do that. So Tier 1 actually requires a diploma level qualification. So that's the Diploma of Financial Planning. That is for the generic advice. So when you get a Diploma of Financial Planning, you are able to have a simple, proper authority that allows you to provide the generic services or generic advice, but no specialist advice. If you wish to provide specialist advice in particular areas, then you need further qualifications in that particular area. Now, we are all going to want that because we all want to provide specialist advice on SMSFs. I can't imagine any of you would go into getting your limited license to be able to provide this advice, not get the SMSF specialisation, which means you've got a limited advice that can only allow you to advise on one product being SMSFs, and you're not allowed to advise on that because you didn't do the specialisation. So you will need to get some education, and I know there's people. Jeff Smith from MacArthur's is in the room. I saw you there, Jeff. Welcome. I know that you've already commenced the CPA program, and you've spoken to me about that. I'm mentioning Jeff because he's one person that has said to me that it is a lot more work than you would initially think. You can't grab it on Friday, do it over the weekend, and hand the assignments in on Monday. I've given 3 courses there. The CPA's course, I've given one at kaplan.edu.au. Kaplan is the course that the Institute of Chartered Accountants have authorised and are recommending to their people. I mean, if you're a chartered accountant, you most certainly can still do the CPA course. Both the Kaplan and the CPA course are online. You do them yourself, hand in assignments. The Pinnacle course, I've put that up there because the Pinnacle gives you an option to do it face-to-face. And I know personally, I much prefer face-to-face education than I do just online. I think I learn more that way. And what they offer is 9 days over 6 months. And I think it's in Sydney, where they may do Melbourne as well, but you've got the website there. Take a note, pinnacle.edu.au. Now, all 3 of these have specific accountants pathways. So they all understand what you need to do to be educated to either be a proper authority holder or to get your own license. So if you go to those websites, just compare the prices and say, okay, I want to be an accountant, I want to get my own license, please give me the education pathway. If you really only decide you want to do SMSF advice, and when I got my license, I chose other things such as securities, managed investments, life insurance, so I can advise on a class of product basis on those items as well. You might just say, well, I only tick the superannuation box and none of the other boxes. I wouldn't necessarily recommend that. I think if you're going to do the training, you may as well go on and be able to advise on, for example, how much life insurance does your client need when if they're setting up a self-managed super fund, things like that. Where do I put my money? But if you only tick the SMSF box or the superannuation box, I would imagine that if you're an SMSF auditor, for example, the training that you do on an ongoing basis to maintain your SMSF auditor qualification would more than adequately cover what you need to do for superannuation advice under RG 146. So if you add to that life insurance, managed funds, shares, then there would probably be a little bit more training that you need to do in that in order to be able to provide that advice. And I'd also suggest that most of you would find that interesting from a personal point of view to do some of that training anyway. Okay, so what are all these options? If we just go back up to what your options were, we'll now go down to what it means. And doing nothing, I did cover this a bit at the start. Situation normal, so you can continue to advise someone to establish an SMSF in the ordinary course of providing them other advice until the 30th of June 2016. Now, I do note that Greg Hayes has publicly stated that he reckons accountants should wait until the last minute to apply for their AFSL because the situation normal until 30 June 2016. And I have no issue whatsoever with what Greg has stated. The only thing I would qualify that with is, by all means, wait until the 1st of April 2016 to apply for your license. But be absolutely certain that you have the education qualification when you apply for it. A lot of license applications have been knocked back up until now because the applicants thought they had the education, but they didn't. And if you don't have the education and you find that out on the 1st of May 2016, you will not get your license. So just remember that. The ASIC training register is there. Google ASIC training register and have a look at what's on that training register. Make sure your course is on it, and the 3 I've provided you are definitely on it. So remembering, if you don't do anything, you don't need to do the ongoing training. You don't need to worry about compliance. You can facilitate setups going forward and even after 30 June 16. If a client comes to you, so a client goes to a seminar on the Gold Coast when they're up there on holidays, and someone says that you really should set up a self-managed super fund and buy a property on the Gold Coast. Yes, I'm being a bit cynical here, I know. And they come to see you on the Monday and go, I'm going to do this, I want to set it up. I could have signed on the day, but I've decided I want to do it through you. Can you facilitate that for me? The answer to that question is yes, you can. But now there's a bit of a problem here. And some of you will even say, well, I want to document that I haven't provided advice, and I agree with that entirely. You should document that you haven't provided them advice and make sure that you haven't. But I got a scenario where a client comes to you that you know that this client, if they established an SMSF, would lose all their money. And there's lots of clients that do this. They go and register for a very expensive CFD trading course or something, put all their money into it, and then watch it whittle away. If you have this client come to you and you don't have a license, and that client says to you, I want an SMSF, under the law, because you're not able to provide the advice, then you should set up that SMSF. You can't say to the client, I don't think this is a good idea. That's actually a breach of the Corporations Act then. But then you're all ethical advisors. I know that. I ask that question in the room every time I present. I say, put your hand up if you're not an ethical advisor, because you get out of this. No one ever puts their hand up. So you're all ethical advisors. Under our rules of ethical conduct for all of the professional bodies, we are required to do the right thing by our clients and ensure that we give them the best advice. Now, whilst the law says to you, you can't advise this client not to set up an SMSF, the rules of ethical conduct require that you advise them not to set up an SMSF. So we have a conflict here, a big conflict. We've got ethics versus the law. Now, in theory, what would you say wins? And if you go through, ethical levels, you might say, I think it was Kohlberg that set this up. You might say that at the highest ethical level, level 5, people would say that sometimes the law is wrong and we need to do what's right. So in theory, you would therefore say, I probably wouldn't, I would say to this client, no, you shouldn't set up an SMSF. But then you're breaking the law. So what do we recommend you do in that situation? What I would suggest you do there is that you have an arrangement with a financial planner or an accountant that has a license, where you know that you could refer this person. You could say to this person, look, I'm not licensed to do this, and I'm not quite sure. I'd prefer that you get some advice first before I do it. Please go and see Peter Johnson first, and he'll give you the advice, and then by all means come back once you've got the advice, and I can see the advice, and I'll certainly establish the fund for you. So you send him off to me or to whoever, and in the meantime, before he gets to me, you ring me and explain all your concerns as to why you think this person shouldn't have an SMSF. And I've certainly seen people recently where I have recommended that they don't set up an SMSF because I don't feel that it was appropriate for them. So that's what we would suggest in doing nothing. What about getting your limited license? Where does that change? So I guess you could look at how is my business now, and most of you understand it, primarily I'm a document provider, but I do have a very, very tiny little practice called the SMSF Expert that does around $20,000 a year. It's not much at all. So where is my business different to your business in that you're currently a practice without a license? Well, the only product I can advise on is SMSFs. That's one thing. So I can sit down, I can have a client sit down in front of me. Actually, it don't even have to be a client. I can get someone from, a punter from the public can be referred to me, and I've given them no other advice about tax at all, and sit down and just say, right, let's talk about super. And I might say to them, yep, I think it's a good idea for you to set up an SMSF. So they might have 600,000. They might be someone that's very well versed in structures and that understands the stock market and could manage their own investments quite well, but probably wants a bit of advice. So I can say to them, I recommend that you establish an SMSF and roll your other super over to this SMSF. Now that's the limit of the product advice. However, because I have managed funds, equities, and life insurance on my license, what I need to say to this person, unless they specifically instruct me to restrict my advice, if they don't instruct me to restrict it, I need to provide holistic advice. So what I can say to this person is, I also think you need $1 million in life insurance and $1 million in TPD. Outside of super, because the rules have changed there, you need 300 grand in trauma, and you need some income protection as well to maybe $7,000 a month. But I can't tell them which policies to take. So I've just got to say, you need life insurance, and they go, well, where do I get that? I go, I can't tell you. So, or I could myself, I could have an arrangement with a fully licensed financial planner, someone that I trust, and I can send them off just for the specific life insurance advice. So they go to this planner and they instruct him to specifically only tell them what life insurance to buy. And hopefully that planner will be on a fee-for-service basis rather than 110% of their first year's premium on commissions. So can't spell advice either. So I can do all that. Now I can actually come down from their equity. So I could say to them, okay, you got 500,000. I want 250,000 in Australian shares. I want 240,000 in international shares, and 10,000 will leave in cash to cover the running costs. I don't want you to go into DRPs. I want you to keep the money in your funds, so receive your distribution so that then we can buy new assets. Your Australian share portfolio, I want you to buy 13 shares for the 250 grand, because that'll minimise the costs of buying the shares and your ongoing administration costs. And I want 50,000 in banks, 30,000 in retail, 20,000 or whatever, and these this is what I would be recommending, some in listed investment companies. The overseas stuff, I want half of it to be in an international share fund which covers the whole world. I want half of it to be in an Asia fund. So I can say that. I just can't say by the Platinum Asian Fund and the Platinum International Fund. I can't say what fund, but I can really get down to a lot of detail and let them know the sort of products that they can buy. Now, one of the things you need to know is that the Corporations Act says that all product advice must be in writing in the form of a statement of advice. Now, this is not just getting your own license, this is being a proper authority holder as well. So you must provide statements of advice whenever you give product advice, which includes setting up an SMSF. It includes commencing a pension within an SMSF. So again, go back to that iReturn client that you had that had 500,000, was just turning 60. Normally it would take you 6 minutes to determine whether or not that person should commence a transition to retirement pension. It will still take you 6 minutes to determine whether or not that client should commence a transition to retirement pension, but you can't give them that advice without giving it to them in writing in the form of a statement of advice. CPA have provided me with the Performer statements of advice, but really it just comes down to their Performer was only for recommending an SMSF, really. It doesn't come down to providing something like, I believe you should start a transition to retirement pension. So you will need that. I'd imagine there'll be, by the time all of you guys have your licenses, there will be service providers, and you know, it might even be me that will say, yep, we'll write your statement of advice, fill out, here's a standard questionnaire, fill that out, send it through, statement of advice, a couple of $100, and you can present that to your client. You need to administer your own license, and I do note that there is full licensees out there saying that your administration is going to be prohibitive and it's going to cost you so much. I've had my license for a year, and administering my license is virtually exactly the same as you guys maintaining your compliance manual for your quality audit for having a practicing certificate. There really isn't that much to it when you're only writing 10 plans a year. You've just got to maintain files, you've got to do your engagement letters, you've got to provide a financial services guide, and again you get that from CPA or CA, they'll provide you the Performer. And then it's just a case of being able to have your files reviewed. You've got to maintain a training register. That's a little bit different. You don't have to do that now, but hey, the training register you should be maintaining, and you can do it online anyway with CPA and CA, and I'd imagine IPA as well. You'll need to be trained, and that's the same even if you haven't proper authority with someone else. The issue with training, I'm with a company called Kaplan. But if you have your own license and you join Kaplan, whilst it's only $30 a month, you have to design your own training plan. So you have to go in there and develop your training plan, and then you do your own training, because you become the training officer of your fund, and you also have to then become the authorised rep doing the training. So I'm currently talking to Kaplan, and I'm going to develop a training plan, and I will allow other people to come in under my SMSF expert, so that you can just come in and join my training, and then I will have done the training plan for you. I'm also hoping CPA comes up with something. I'm in conversations with them just about also minimum number of hours, so you can work out what you need to do. So you will need to do that training ongoing. So that's limited license. So what about getting a proper authority? Getting a proper authority is going to be simpler. There's no doubt about it. You contact the dealer groups that you're interested in, find out all their fees, ask them what training they require, and some of them are not really requiring too much training if all you want is a proper authority to advise a client to establish an SMSF only and no other advice. Now, I don't know what they're saying there with pensions. Maybe they'll allow you to do pensions as well, but realistically you just want to be able to provide advice to establish an SMSF. They're saying, well, you're already qualified, we will need an SMSF specialisation, but there's not too much to it. Need to contact those. You can then advise on products depending on the level of licence you get. Now, I'll qualify that. Most of you won't want the full proper authority, because that's going to cost you 15 grand a year, and that's the only one that allows you to give full product advice. So that's going to be fairly rare that you'll do that. You will need to do your ongoing training. Most likely, they will sign you up to Kaplan. Their training officer will have developed the plan on Kaplan, and what happens is each month you log on to Kaplan, take an hour or so to do your training, and then get 2 or 3 hours worth of CPD points. It won't necessarily be geared towards only SMSFs. Their training would probably cover everything. There'll be less administration, but it's not going to be massively less, maybe 3 or 4 hours a year. I can't see that my administration just to administer my license would be more than 3 or 4 hours a year. I've got to provide my accounts to ASIC, but hey, I've got to do my accounts anyway. I've got to renew my memberships of the Financial Ombudsman Service, things like that. It's not that hard. You will still have to write statements of advice, but they will probably have an internal SOA writing service, and I'd imagine that anyone that is going to be going with a dealer group, that dealer group will want to write a lot of your SOAs, at least until they're comfortable with the advice you're giving. I know that if I was to provide proper authorities through my license, I know that I would have as a requirement there that I write the SOAs so that I know what's going out the door. You don't want one bad apple destroying everything. I think that's a bit of an issue. Yeah, I can see Grant's offering questions if anybody has questions. I mean, a lot of you call me regularly, so you'll probably ring me on the mobile when we're finished. Okay, your other options, joint venture. Let someone else worry about it. So what do we mean by a joint venture? Those of you that remember when I was in practice, we had a full financial planning arm. We had another guy running that financial planning arm. It wasn't a joint venture, but it was a full-on business. And you could certainly do that. You could find a local financial planner. You could say to him or her, sorry, we've got a spare office in our room. Let's set up an entity, XYZ Limited, proprietary limited, I assume. You own half, we own half. You take a salary, and we'll refer clients to you, but we also want you to go and get some of your own clients. That's an option. I'd imagine most firms wouldn't be looking at that as something that they want to do, simply because you would already have gone down that path. But I did meet one firm in Perth that had just started doing it, and they said it was going really well. They were a 4-partner firm, so they're quite large, and I guess they felt that they had a lot of clients to refer over to financial planning. I would imagine most of you in the room would not be interested in doing that, though, because clearly it means that you're basically starting up a totally new business arm to your business. Referring on to another financial planner, i.e. doing nothing, I think doing nothing, you still need that referral arrangement because of what I was talking about before, where you get the client that you believe shouldn't have an SMSF, and you need to refer them on to someone. I think even if you get your own license, you will still need to be able to refer people on. I need to be able to refer clients on for life insurance. I'm not too stressed about managed investments. I mean, my personal belief are that if you hold a portfolio of direct shares, you're going to be so closely aligned to the index performance without paying fees that you'll be fine. But life insurance, I think they should get some advice on it. But it's up to the client, so I will need someone to refer to, although I certainly don't have a formal arrangement with anyone. I say to them, have you got someone local? Normally they say yes, and I go, yeah, we'll go and see them. An option to get your own AFSL, and as I say there, if you're in that position, you don't need this presentation. You should be giving it, not receiving it. Costs. Okay, what are the costs for doing all these things? And I know that I'm going to differ vastly for what's being put out by the market, but I also note that most commentators out there are dealer groups that are trying to get you to sign up with them, and all of their information is geared around telling you it's too hard to get your own license. The professional bodies aren't commenting at all. They're educating, which is great, but because they're not political in nature, or they are, but they're not out to force you to do anything, they're not really commenting. So the cost of doing nothing, well, there you go, it is nothing. When I say setting up procedures, the cost of setting them up, I would imagine that you would want a process to document and evidence that if you've established an SMSF on behalf of a client, that you have not provided them any advice in order to recommend that they want that SMSF. It is execution only. They've asked you for it, and you've facilitated that execution. The cost of becoming an authorised rep, I've seen it as cheap as $250 a month, just for SMSF advice only and nothing else. Unfortunately, that dealer group was in the media last week. ASIC have already shadow shopped them and said, sorry, you're not providing adequate advice, and have told them to get their act together. And this means that they and they've responded with, we're going to employ a compliance manager. And I would have thought that would have been the first thing you do when you set up your own license, is you need a compliance manager, because you want to ensure that your advisors are giving the right advice. And I will mention that dealership a bit later on, because they're actually on my recommended list. So that's where you've got to be careful being with a dealership. But know their fees. It may sound cheap when you get up front, but know their fees. I'm not going to comment on who charges what, but make sure you know what they are. The cost of employing with a financial planner, a JVing or employing, well, if you employ one, clearly the cost is very expensive. Even JVing, I would imagine that unless this person's coming with a lot of their own fees, there's going to be a salary you're going to have to pay them, and you're going to have to wear that salary for a while before the money starts coming in. I've set up financial planning practices before, and I know that it takes a long time, because you've got to, you've got to speak to someone. You then might get to actually interview them in 2 months' time, and then you've got to roll over the super, and then you get paid 2 months after that. It can take a long time before you actually get the money. Getting your full license, I don't think anyone's going to do it, but yeah, it's a full AFSL, which is not what I've got. You're basically becoming an AMP, 20 grand plus to set it up, and you've got to be audited and everything, so we won't really look at that. The costs of getting your own license. I've done mine through a separate entity. You can all see that the SMSF Expert Proprietary Limited is my licensee. It's, from my point of view, it's an entity that does give retail advice, has its PI, it's effectively an accounting practice and a limited AFSL holder. So it's better to have that dealing with the public. From my point of view, I don't want to have those clients that I see having access to CST Corporate Solutions, which clearly has a much stronger balance sheet than the SMSF Expert does. So it's about protecting my assets there as well. Costs $1,522 to apply for my license. It's $840 if you wish to apply for as an individual, but it's $1,522 to apply as a company. My professional indemnity insurance went up $500. Now, people will tell you you're going to have to pay 7 to 15 grand for professional indemnity insurance. It was very easy for them to promote that before the policy started coming out. And there's not many people that will insure you. But if you are a CPA, and sorry, I can't comment yet for CA or IPA, but if you're a CPA and you are insured through Fenton, Green & Co., you already have the professional indemnity insurance. So you're already covered. Even though you don't have a license, they actually have covered the licenses now. What's happened, obviously, CPA have gone to QBE, the underwriter. They've shown them how we will be operating our businesses as a CPA. Remember, we will be quality control audited by CPA as an AFS, a limited AFSL holder. They've shown them our procedures. They've shown them our compliance manual. They've shown them everything else. They've been dealing with us for many, many, many years, and they've said, yep, okay, we're happy to cover the limited licenses under the current arrangement. Not sure what CA and IPA are doing. If you're a CA or an IPA member, you can still be insured through Fenton, Green & Co. and can still get your professional indemnity insurance and have it covered for your license. You'll just have to go through a few more hoops because your professional body hasn't presented their case to the insurer. You need to join a dispute resolution service, which is the Financial Ombudsman Service or the Credit Ombudsman Service. Now, I joined the FOS, Financial Ombudsman Service, because I assumed that the other one's called the Credit Ombudsman Service and they wouldn't accept me as a member. Just made an assumption in my head. Subsequent to me becoming a member of the FOS, the COS contacted CPA to wonder why no one was contacting them, and then informed us that, well, of course, you can join us as well, and I believe they're cheaper. I don't know what benefit you will get from becoming a member of either of the two, so probably joining the cheapest one is the best. You need to pay for your training. I probably should change that slide. It costs $300 to $3,000. I've seen you can Google RG146 training, but I think it's also then exceptionally important that following that, you Google the ASIC training register. As I said, a lot of people have applied for their license and had it rejected because their education didn't cut it. Wasn't acceptable, because it needs to be a diploma level qualification in generic financial planning. There's people giving RG146 training that will allow you to become an authorised representative only. So if you want your own license, you can't do that training. And it says there, do you want the tick or do you want to learn? Again, if you if you want the tick to get your own license, you're going to learn the stuff anyway, because you have to do the full diploma. For those of you in Sydney, I believe you can also do the diploma at one of the TAFEs. So maybe if you're not in Sydney, I know there's people in Melbourne, Brisbane, everywhere on here at the moment. If you Google Diploma of Financial Planning TAFE, you can probably do it at a TAFE. So that would give you face-to-face, but I believe it will take you close to 12 months to do it, which means you're at the end of 2015. That's okay though, of course, you still have plenty of time, but I wouldn't be leaving it till next year to chase TAFE. Okay, if you want to get authorised, first of all, you need to decide who you want to be authorised under, and I've given you some examples down there. You need to determine their training requirements, but I think what you also should do is ask them a few questions about what they require. Now, I'll just give an example. I don't believe Jeff's in the room. How I'm a member of the MacArthur Accountants Discussion Group, and I presented out there a couple of months ago on this exact topic. And during that week, I'd been referred a client from an accountant in the Rellan, and this client was doing a St George limited recourse borrowing arrangement, and they needed a certificate of advice from an RG146 advisor. I don't know what the banks mean by an RG146 advisor. You mean you're either a proper authority holder, a licensee, or you're not. I mean, are they saying that if you've done the study, even though you're not licensed, you can do it? But anyway, they want a certificate of advice from a licensee, basically. And I said, yep, okay, I've got my own license, so I need to research what I've got to do here. I thought, it's specific advice, okay, they don't want me to talk about anything else. The St George sheet says I've got to advise them about gearing and its implications, and also I've got to confirm that the investment is in accordance with the investment strategy of the fund. It's not difficult at all, really. I don't have to say whether or not it's appropriate for them. I've just got to advise them on the consequences. So I looked at that and said, well, that doesn't take too much. Now, under the law, I've got to give that advice in writing. That's cool. So what is the process that I have to go through to comply with the law to give these people the advice? Well, first of all, I've got to engage them, okay? And we have to do that as CPAs. I've got to give them my financial services guide, which explains who they're dealing with, how I get paid, and all this sort of stuff. I then need to interview them, and then I need to give them a written statement of advice. Now I can do that quite quickly because it's the same advice for everyone that goes to St George. So I've templated all this, and I do it in a 1-hour meeting. And it's not an hour, it's about half an hour, and then I've got time for, you know, engaging them, and I've got an engagement letter, I've got a fixed fee quote, it's $495. That's what it is. Now the other accountant who was in the Rellan is a member of Count, and I'm certainly not saying anything bad about Count. It's great to be with Count. And he went to his dealer group, because they control what he does, to do the exact same thing with one of his clients who had decided to borrow, and they said you have to do a full statement of advice, you know, holistic advice. The cost of that to his client was $2,500, and they were doing this regardless of what he said. So it became a bit of an issue there because they were forcing him to do a lot more work, and you might find some of your dealer groups will be like that. So you need to make sure that they're going to be on your side for things like that. They'll lead you all the way. Now, why have I got these three firms, Fortnum Financial Advisors, GPS Wealth, and the NTAA, or Interprac as that's known up there? Well, firstly, you all know the NTAA. I will now just preface would be earlier. I'll just add to the NTAA one though. Interprac were in the media. It was that dealer group that was in the media where ASIC said that some of their advisors were giving inappropriate advice, and that the dealer group wasn't supervising them well enough, and that was them that responded with, okay, we're going to employ a compliance manager and all that. I don't know what will happen with the fees, but you certainly should Google that.
So, Peter, everyone's lost audio.
Say who the dealer group was. You didn't have to say who you were.
You're back. That's good. You just lost audio, everyone's saying, and you're back now, which is great. So I'll.
Where do I need to start?
So if you can just go back to after you were talking about You were talking about NTAA, and so just go back to NTAA and explaining that dealer group problem.
Okay, I'm just saying, do your Google research on Interprac before you make a decision. So just Google it and just have a look at and make your own decision on that, because as I said, you want to make sure you don't want your dealer group costing you your reputation. That's one advantage of having your own dealer group. I'm the SMSF expert. The only way my dealer group is going to cost my reputation is if I do something bad. The other two, Fortnum and GPS. The Independent Financial Advisors magazine, earlier on this year, did research of in form of a survey of financial advisors, asking them how they rated their dealer group. So how good do you think the dealer group that you deal with are? So, you know, they would have asked some accountants, what do you think of Count? They would have asked some AMP advisors, what do you think of AMP? And it was, well, when I say it was anonymous from the advisor's point of view, but not of the dealer group's point of view. And Fortnum Financial Advisors was the highest rated dealer group by its advisors. And I do note Fortnum is independent now as well. ANZ had a stake in it. The advisors bought it back off. It's owned by the advisors. GPS Wealth came third. So that's why I've put those two up there as dealer groups you may look at. And obviously I've put the NTAA as well, because it's all for accountants. Also, there are heaps more. Google it. Go to a conference. I'll come and present. Also, another good thing about Fortnum and GPS is they both have specific accountants offerings, and when you talk to them, you will be talking to an accountant. So if you talk to Fortnum Financial Advisors, you will speak to a guy called Scott Charlton, who is a chartered accountant and a former consultant with Rob Nixon's group. So, you know, he's written books on accounting and accountants teaming up with financial planners and things like this. And the same thing at GPS Wealth. You'll speak to a guy called Greg Holman, who was an accountant in practice that moved into setting up a financial planning business on the Sunshine Coast. So these guys are set up for accountants. So have a talk to them if you're interested in going down that route. I've got my name there. I'd really want to see people come and talk to me and go, yeah, we're interested in doing something like this because we want to be with a pure accountants group. And if I had enough interest, I would actually open up the SMSF expert as well. It would be very picky though. We'd want to make sure that there's no one going to go out there and do something that would affect the reputation of that business. So what do you do now? The first decision you have to make is, are you going to move into the space of providing advice on or before the 30th of June 2016. So are you going to either, one, get your license, or two, become an authorised representative? And it doesn't really matter which one of those two that is yet, because you can change your mind later. Okay. If you are deciding that you will provide advice, the first thing to do is to get your education, regardless of whether you're going to be authorised under someone else, or if you're going to go and get your own license, you need to get your education. You do have a lot of time. You've got until 2016 to apply for your own license, but it's going to take you a while to get your own education. Now, I do understand that that's a horse and cart thing as well, because some of the dealer groups will have much less education requirement than getting your own license. So getting your own license requires a diploma of financial planning. Becoming an authorised rep does not require that level with some dealer groups. So you may also do some research of these guys and just say, what education do I have to get in order to move into this space? So that's the decision you've really got to make now, and then look at your license a bit later on. Now, when you're ready to go for your own license, what do you need to do? Okay, so it's an ASIC form that you need to fill out. Thankfully, there's no trick questions on that form. On that form, you just answer yes to everything. It's not like the super fund tax return where there's a couple of no's. You know, have you lent money to a member? No. Do you have assets beyond 5%? No. So in the super fund return, you've got a few sneaky ones. In this one, there are no sneaky ones. It's just all yeses. So it's not a difficult form to fill out and submit. But before that, you need to get a few things. You need to make sure you can get your professional indemnity insurance. You need business references from two people. That's not hard. I can give you a pro forma reference. Go and get them signed. You don't really have to get your precedents for compliance from your professional body, because they don't ask to see those when you apply for your license. I think it's a good idea to get them, but you don't have to have them before you get your license. You complete the online application process and your license should come back within a month. If you have applied for your SMSF auditor's ticket over the last couple of years, you will have experience in what information you need to collate. You need evidence of your education to give to them. You need your practicing certificate. Stupidly, I said that I had a practicing certificate with CPA, but I was also a member of Chartered Accountants. And because of that, I needed to, and I didn't provide it, I needed to provide my CA membership as well, and that delayed my license only by a day, because I replied to the email straight away. Had I simply said I was a CPA and submitted my practicing certificate, that would have been okay. With your practicing certificate, the question I asked was, well, I get one every year. I get an annual practicing license, but I also got my practicing certificate in 2000. Which one do I need to give you? And they said it's the 2000 one that you've got to provide them. I mean, they'll go and check with CPA anyway. You need to have a police check done, and I can guarantee you it takes longer for a police check under the name of Peter Johnson to come back than it does under most other names, because there's more of us. But it should only take that long. So that's what you're after. Other things to consider. If you don't have your license by 30th of June 2016, you will be knocking on my door to say, Peter, I need a proper authority. You will not be able to get your license after the 30th of June 2016. It's also a very interesting little barrier to entry in terms of getting one. Just think, if you're in practice, you become the licensee, and you've got staff that are working for you who don't become authorised reps because they don't have a diploma of financial planning yet or anything like that, and they decide they want to go out on their own, they will need to go and get an authorised rep status with a financial planning firm the day they leave, because they won't be able to give that advice. So it really is an extra qualification we're going to need to get just to be in practice now. ASIC will definitely shadow shop. They've already done it. They've already shadow shopped Interprac. So we've seen the results of it. You can be absolutely guaranteed, if you have a license, that you'll be shadow shopped. I believe I was the second license. I'm surprised that that they haven't shadow shopped me yet, but interestingly, all my clients come as referrals from accounting firms, so they probably wouldn't know how to contact me. They'd probably be looking for an advertisement or something. Get your application in early. That is in absolute conflict with what Greg Hayes says, and I understand what Greg's saying. My only warning is that there's so few licenses being issued so far, I think it's around 20, that if all of you want to get your license and you all apply on the 13th of March 2016, that there will be delays. And what they may do, if there's going to be delays, they may extend the accountant's exemption. They may say, well, we will extend the accountant's exemption, but probably only extend it for those of you that have applied for license. But then the problem is, if they extend the exemption, and then on the 15th of August, they assess your license and go, you don't have adequate education, you're gone, you're out of it. You can't advise on SMSFs. So you would need to go and get your education prior to, and then you would also need to become a proper authority holder under someone else. So that's why I'm encouraging people to get their application in quite early. Just another thing as well, just remembering questions that I've been getting in the past. For those of you that are in multiple multiple partner practices, they're saying who should be the responsible manager for the dealership. And I would suggest that you do have at least two from a risk management point of view only. Maybe this should be in our risk management manuals. If, for example, you're in partnership with me, you're a business partner with me, and I was the only responsible manager, and then I die, that can happen, probably will happen one day, almost certainly, or we get the poos with each other and I walk out. In that situation, you can't give SMSF advice from that day, because the responsible manager needs to be under the license, and even if you've got authorised reps, you don't have a responsible manager. You can't give advice at that stage. So, I mean, if you were an authorised rep and you're in a position to move into a responsible manager's role, then yes, that would be okay. But you won't be in that position from the 1st of July 2016, because having a practicing certificate is not adequate experience. So if you are my business partner and I'm the responsible manager under the SMSF expert, and you go and get your diploma, and we just make you an authorised representative because there's less compliance on you, and then on the 15th of August 2016 I die, we don't have a responsible manager in that licensee. And we can't appoint one because in August 2016, to become a responsible manager, you need your education, which you've got, but you also need 3 years out of the last 5 because the grandfathering period of having a practicing certificate is finished. So think about all the partners, or at least 2 of the partners, becoming responsible managers, if that's what you're going to do. Okay, we're now going to run a quick question, a poll. Now, I'm doing this each time I present because I'm just trying to get an idea of what accountants are going to do.
Pete, can I just jump in just before you do that?
Sure, man.
Yeah, there's just a couple of questions that have been asked that people might need before they can tick to. Could you just answer these for us? So sure, John man. Says, if one person in the office is licensed or an authorised rep, are they the only ones that can advise, or do all the accountants need to be authorised or licensed?
Good question. You cannot provide advice without being an authorised rep or without being the responsible manager. It is not the firm that gets licensed. The firm has a license, but it is only the authorised reps that can do it. Now, you can be an employee of so let's say that you run it through your main practice. So let's say I had CST Corporate Solutions as my my dealership. Then Tracy, a lot of you would know Tracy. Tracy could actually then advise, but she still has to be qualified. So she doesn't need a proper authority. She can advise, but she has to be qualified. So she's effectively got to be an authorised rep. So the banks have employees. They're not authorised reps, they're employees. But they're still qualified. They have to have the education. They're covered under RG 146. So if you've got an accountant that is not doing the financial planning ongoing education and they put their name to the advice, you're in breach. So yeah, I would suggest that they all get authorised, or you just have someone that sits in the room or and gives the advice. Yep.
Fantastic. Okay, forgot one from Nick as well. It says, what if a 2-partner firm was a member of a dealer group and only one partner was an authorised rep of the dealer group? Can the other partner just have a limited licence, or do you think the dealer group would make second partner become authorised rep or of the dealer group?
Yeah, okay, that's a good question. Actually, in theory, you could have both, definitely. So let's say Grant and I are business partners in a practice, and Grant goes and gets a proper authority with, say, Fortnum that we've got there, but I want to get my own license. So I set up another entity called the SMSF Expert Proprietary Limited, and I have my own license, and Grant is an authorised representative of Fortnum Financial Advisors, and Grant might therefore in that position be a full authorised representative so that he can do product advice as well. So I can do all the setups without having to worry about complying with the dealership requirements, and I could then refer my clients onto Grant for the life insurance, specific life insurance advice. But what you would have to make sure is that you don't mix hats. You want to then make sure that Grant does not see clients and we put my name on the plan and pretend that it's me that's doing it. You've got to be careful there. You need to give the financial services guide of the person that will be giving the advice, and you need to make sure that that person actually provides the advice. I think it would be simpler and more beneficial to have both of them with the same group. So, but remember also that if you're a proper authority under a dealership, so let's say Grant decided to join Fortnum and he was my business partner and I did nothing, but I went and got my education, if Grant dies, I can then join Fortnum and they'd probably authorise me the next day. So it's a lot simpler with a dealer group because that dealer group will continue on. But you need to know exactly how they work and you need to know what education they require. Any more questions?
And Graham says, what is the situation with existing clients who have an SMSF? Do I need to be registered to continue to talk to those clients about their SMSF?
Okay, good question, Graham. Now, remember, existing client is irrelevant from the 1st of July 2016. The concept of an existing client allows you to recommend to that person to establish or wind up an SMSF in the ordinary course of providing them with other business. Remember, going forward, compliance advice is unlimited. So if you have an existing client and they come to you and say, can I buy a holiday house in my SMSF? Or I wish to commence a pension, can you do all the documentation for me? Or a client comes to you and says, I want an SMSF, can you set it up? You can continue to do that. What you can't do if you don't have a license, even with an existing client, is to say to that client, you should commence a transition retirement pension. You can't say to that client, you should set up an SMSF and put your business premises in it. That is what's going to be the breach of the law. Does that cover it? Is that all right, Grant? Have I lost you?
So John's got a supplementary question. Graham says yes, that's fine. So the key is that everyone that will advise must get education.
Yes.
Fantastic. All right, well, that's all the questions.
Okay, we now have a little poll, and this is just for information of what you're going to do. And I do find that depending on the group I'm presenting to, the numbers are vastly different. When I'm actually promoting a conference, a presentation on the licensing, I find most people decide that they wish to be licensed in one way or another. However, if I'm just turning up to a discussion group where accountants have just turned up, I actually find most of them say, no, I'm not going to do anything. But if you have a look at the options we've got there, what do you think you will do going forward? And Grant's going to provide the poll here, which is on your screen there under polls, although he can probably explain how to do it. Do you think you will do nothing and refer on to a financial planner? Well, the second option is, do you think you'll become an authorised representative of a dealer group? And good old PowerPoint's changed my authorised to an American one. Do you think you get your own limited Australian financial services licence? Or currently would you be thinking, I'm just going to get educated, but I don't know which way I'm going to go yet? Or do you think you'll be joint venturing with a financial planner? If you could just tick on the box of which one you think you're going to do, just so we can get an indication, which will give us a fair idea of what accountants are doing going forward. Plus, you'll see the results of the polls. So,
all right, so I've just put that up there now. You just have to click a box. It's not going to give us your name or whoever. We just want to know percentages that are all coming up. And just a couple more seconds. Still got 25% of you making a decision. And 5, 4, 3, 2, 1. All right, we'll just close that and have a look at the results. And can you see those there, Peter?
It says that I've got to hide it to enable screen sharing. So
okay, that's cool. What we'll do just for a moment is...
Okay, no, I can see it. Can you still see my screen okay?
No, but that's okay. As soon as we hide that, your screen will come back up. That's fine. So we've got 22% that say do nothing, refer to a financial planner, 20% become an authorised representative, 27% get my own limited AFSL, 36%, so the majority are saying get educated, but I still don't know which path to take, and 2% are going to do a joint venture with a financial planner.
Fantastic. Okay, well, that's a little bit different to what I normally see, but I don't usually give the... Has my screen come back up, Grant? I don't normally give the option of getting your education and worrying about it later. Okay, that's great. So you can all see the answers there. We're basically done. Now says questions, but I think we've answered all the questions. My details are up there. Most of you are clients anyway, so you've certainly got my email address. Those of you that are clients of Grant's, there's my details there, and I'm certain that if you send me an email and request a copy of the presentation, then we will give it to you. If you want a certificate just to say that you've attended for CPD, although most of you will be fine just to be able to put that on your training register. If you want just a copy of the slides, I'm happy to provide those as well. So thank you all very much for coming.
We've just got a couple of questions, Peter.
Perfect, mate. Read them.
Yep. So Jackie says, Peter, do you think you will be offering AR for accountants that you know?
Hi, Jackie. I, at this stage, think that I will be. I wasn't trying to get on here and promote myself because that's what everybody else does, and then it sounds like a conflict of interest. If there is enough interest, yes, I would just need to make enough in fees to employ a compliance manager, because it is a full-time job. So I would have someone in here that would be providing advice to you guys as to what to do in terms of the plans, writing the plans, and also doing the audits that I would need to do on an annual basis of each of the practices that are underneath me. So yeah, provided I had about 40, I certainly haven't had anywhere near 40 that have shown an interest, but if I had 40, I would be able to provide that service. I would also then have a fully authorised person that would be able to do the other stuff as well, so the life insurance, etc. Thanks, Jackie.
Fantastic. And I've had a couple other people saying, Karen says at what point, etc. So it's pretty well the same question, would you do it? And John says having SMS Expert as a choice is a good idea as well. So what we're going to do, team, is have this all set up for you. My assistant will get the recording done. So sometime later on this afternoon, we will have it up on a website where you can watch it again and download directly from there a copy of the slides so that you can have those as well. And just a reminder for those who actually want a certificate, make sure you send an email to peter@cst.com.au and he will provide that. So thanks very much, Peter. That was very informative, and particularly like the parts where I was going to become a financial planner. I'm glad that was just a metaphor and you were using that, because that's not going to happen. But we've got lots of people saying thank you, and I'll just hand it back over to you to say farewell, but I think we're finished.
I think we are. Thanks very much, everybody, and I look forward to the phone calls for the rest of the day. I have no issue with that whatsoever. That's what we do. Thank you, and a good night, as they say.